to build the perfect of this area. How would you go about building the perfect accumulation? You'd say, well, what I'm going to do is I'm going to take the price up. We're going to take the price down. I'm going to take the price up. I'm going to try and hold it here as long as possible. We're going to take the price down. We're going to try and grind the price up for as long as possible. And then we're going to try and widen out the process. And either you take the process back inside again and you go for one last surge into the inside, or not, doesn't make any difference. But the idea now is that you're going to be trying to now make money on this position. And trying to make money means that you're now actively trying to play off of this technical level, because there's a lot of people trying to trade off the technical. What we're trying to do is manipulate those guys off the table as well. And that's what it should look like when you finish. So when you look at today's S&P and you can compare what we're seeing compared to the S&P, what we're seeing, we can obviously draw in the various elements. We can draw in the line, which is quite clearly this VWAP line right through here. We can see the elements of it. We can see the 1, 2, 3. We can see, if I just draw it in very basic terms here. So there's the 1, and there's the 2. We don't really get a 3, but we could have included this one, of course. It doesn't make any difference, really. And then we get the kind of the kind of manipulation phase here, driving clean through to the bottom edge. This should have been the 3, of course. You'd have imagined that would have been the 3. And then you're obviously now getting the lower hold. And from the lower hold narrative, you're now looking at that and saying, right, there's your markdown. So it's never always exactly the same. But the process to get buyers at higher prices, the process to, especially on a Monday where it's called Liquidity Monday for a reason, of course. And, and the reason why it's called Liquidity Monday is because there's no fecking liquidity anywhere on Mondays. And for that reason, we need to make sure we're always asking for liquidity on Monday, just because, well, we need it. If there's no liquidity anywhere else, we absolutely need to find it somewhere. And usually the only place we can find it is into session highs, day session highs, or into massive big key dealers, key levels. And, this can take place a lot longer than anybody could have imagined. I mean, on bonds, you can see this taking place over 2 or 3 days. Not just one day, but you can see it taking place over 2 or 3 days. And, obviously that accumulation is not unusual over that type of period. We've looked at some of the other markets like oil, and it can be 2 or 3 weeks accumulation on some of these bigger contracts, couldn't it? And these ranges can be substantial as well, so don't overthink the idea that that's got to be within a certain size. I mean, it can be huge, the difference between the baseline price and the top edge. I mean, in the bond market, it's between $1,000 and $1,500 per contract on the bond. So, that accumulation range can be substantial. But yeah, there's always more than one reason, and maybe the reason changed. Maybe there's always going to be something. But the key thing, Jack, is this. You've got to at least know about it, right? You've got to think to yourself, well, there's probably going to be negative sentiment, right? So when you see it going higher, you say, well, that's what I expect to see. That's what I expect to see to try and get people into a short. So what I need to now do is wait for those short sellers to show up so that I'm not missing something here. When the short sellers show up, you're saying, well, they've got to take VWAP offered if it's really bearish. They then take VWAP offered, and that was right at the London Open, and that gave you the perfect opportunity to then get short into the London Open itself and turned into a very, very good trade. Sell side gold, by the way, I'm just, sorry guys, I'm a wee bit distracted, but I got a bit of short selling on gold, very easy looking trade, good, very expensive gold product, as you can see here, and a good wee chuck of liquidity into that at 95s. We've just traded through the 90s. And we've made target on that, so that's a nice $500 winner. If anybody's playing the gold market with me, very, very quick, nice $500 winner. So that was pretty good. Looking elsewhere, the beans long, I'm still holding. We had a chat about that this morning. We're holding the beans as a long position at the moment. So the beans long expected to run into day session highs when we get kind of into the US session proper. So we're expecting that at the moment. So let's see if the beans go ahead and do that for us. That gas trade, how is that buy on the gas doing that I touted this morning in the London session? How's the buy on the gas doing that I touted this morning in the London session? Pretty good. So we talked about this as a buy trade, macro buy trade, but obviously if we get some short-term value, it's not just a macro buy trade, it's a short-term buy trade as well. So what happened? We got some short-term value creeping in here. So we're then able to try and work into this at 28 handle. And with the 28 handle taking it bid, we're nearly traded the 29 handle already on the gas trade. That's perfect, isn't it? What a perfect outcome from that bottom line price, guys. Absolutely super trooper. Love it. Love it.